Well, g'day there, everybody. Welcome along to the first calendar recording of the year 2020. I hope you have had a nice break, hopefully away from the markets over the new year, and you are refreshed and ready to come back into the world of trading. I do believe it is going to be another, relatively speaking, blockbuster year. I do believe that the financial markets are going to end up considerably higher as to where they are trading as at the current juncture. However, I did want to point this out to you as we move into, of course, January 2020. Yesterday, I returned personally from my holiday, my vacation. I've had about 2.5 weeks away from the market. I have been watching the market, however, daily, just simply not trading it as I have been away on vacation. Very different, obviously, to how we ended the 2018, right, calendar year as we moved into the beginning of 2019. Let me just refresh your memory because, again, as I sat down and recorded Pivot Point Pro, the first class of 2020, really this current sort of setup that we're looking at is really the antithesis of what we were looking at through the Q4 meltdown of 2018. I just wanted to refresh your memory a little bit. During this time over here, it was a very pessimistic, very dire sort of at least end to the year 2018. However, as the consensus was very much bearish on the overall markets, as we moved into 2019, right, we here at Pivot Point Trading were very much bullish on the overall market for the entirety of 2019. And if you've been listening along to this YouTube resource here in the public domain, I think you can all very well at least admit with me that we have been resiliently bullish throughout the entirety of 2019, right? And we were correct in doing so. Now, as I continue with this thought, or at least this chain of thought, I wanted to show you obviously how we've ended the 2019 calendar year and where we find ourselves at the current juncture. Obviously, this green line on my screen is very different to this red period over here, the Q4 meltdown in 2018. And really, if you think about the sentiment, the psychology of active market participants at the moment, and really just the greater public as a whole, it's really at this particular time a market filled with greed. Okay, it's as if there's no risk in the market itself, and you could say with a high degree of confidence, right, that the majority of people are overly bullish. It's as if there's no risk in the market whatsoever. People are, essentially backing up the truck. They are filling their portfolios with stocks as we are moving into the year 2020. And the reason for this video, right, to put this out in the public sort of discourse at the moment is to simply warn you that this move here, which has been tremendously profitable more recently for us as we've closed out positions during this period just here, right, as we moved into Christmas, this is where we liquidated at least a portion of our market positions. What you need to think about right now is to simply, I guess, disconnect emotionally from the market. I understand there's a serious bout of FOMO going on, the fear of missing out, but the market itself is acting like a honeypot. It's trying to tempt you right now into going long, into sort of participating in what is a definitive, legitimate trend at the moment. But as such, it's really fool's gold at the moment up here, in my opinion. And what I mean by that is, to be specific, is that I do believe in the first quarter of 2020, the markets themselves are going to move into what we call an intermediate correction. Understanding that the markets as a whole, there's 3 layers to the trend itself, the direction of the market. You can use the analogy of the ocean itself, but you've got the macro, which is essentially the tide. You've got the intermediate, which is essentially the waves. And then you've got the M for minor, which is the ripples. Okay. And if you're thinking about the intermediate time frame, or at least what I'll do is I'll start with the macro time frame. That's the macro direction of the chart itself, or the direction of the trend. And that is still very much bullish. And I expect that to linger and to persist all the way throughout 2020. However, you get into these periods whereby the waves, or the intermediate level of the trend, it moves against, only temporarily of course, that of its larger fractal, which is the macro time frame. So when you think about the intermediate sort of movement of this breakout since October 2019, we're really getting towards the end of what has been a very strong thrust to the upside. This itself, it's sort of operating on fumes at the moment. It seems to me that we're very close to some form of exhaustion in this intermediate wave. And what we spoke about yesterday in Pivot Point Pro was really having the commitment or the courage itself to remain disciplined and to remain, I guess, patient as we move into 2020, or at least as we begin here in the month of January 2020, because the easy thing to do right now is to simply sort of unconsciously buy into, right, the continuation of this trend at the current juncture. That's the easy thing to do. That's what the majority of market participants are doing. They've come back into the new year. They're probably loading up on stocks if they haven't already done so through the fear of missing out, that FOMO effect right at the obvious wrong time if you're looking at the chart objectively. I want you to understand here, I am very much optimistic on the markets. And unless something fundamentally changes in the markets at some point throughout 2020, at this timestamp right now, the first recording of 2020, you can expect the markets to continue in their trend to the upward direction, whereby we should see these markets closing substantially above where we currently are. However, and this is the big caveat as to why I'm sort of sitting down here on a Sunday and I guess just pushing, or at least putting this video out there in the public domain, is that before we really see the continuation of this legitimate trend to higher prices, we have to naturally sit through this major correction. This major correction, I cannot sit here and say definitively how it's going to look, but I do believe it is going to be a retracement larger than a 10% drop in the overall market itself, depending on, of course, where we actually sort of plateau and begin that retracement. So again, try not to find yourself acting emotionally at the moment and just simply buying the market, going long, loading up on calls on individual stocks and also the markets themselves. What I would recommend, and this is what I am personally doing, after closing positions out right at the sort of the finale of 2019, is essentially just sitting on your hands, or I myself sitting on my hands, and waiting for that next pullback opportunity whereby you can strategically enter into market positions, enter into individual stock positions, right? On the anticipation of the bounce and the continuation to higher prices as we move further and throughout 2020. So again, this video right here, it is a big warning. It is a massive warning for people out there who may not be familiar with how markets move, the movements of a trend, the different fractals of a trend, and hopefully, if anything, I've sort of maybe provoked you enough to understand that you shouldn't find yourself in the majority being that of a risk-free market, a market which just continues to move to the upside, whereby instead you should be very fearful about the lack of volatility in this market, the readings that we're seeing on the VIX. And what you should be more cognizant of or aware of is the impending reversal upon which Pivot Point Pro is going to play a significant feature into strategically once again entering into market positions like we have done in 2019 and really just played out, or at least rode out, the majority of this trend to the upside, whereby we closed significantly higher come, of course, the end of 2019. I still see the market through sort of green glasses or rosy colored glasses at the moment. However, I am aware and I am waiting for a legitimate pullback, which is going to spruik the market. It's going to play into the fears of the majority, the people who are simply buying emotionally at the moment. And it's going to force them, again, emotionally, as a reaction, to sell those positions that they may have only recently entered into in the fears, of course, of recessionary talks or whatever it's going to be when the time comes, when they fit the narrative to what the market is doing. It's going to be a buy the dip opportunity. So again, I don't want to go into much detail about it. That detail is in Pivot Point Pro. I would recommend that you start the year on good footing. And what I mean by that is, good footing means simply doing nothing at the moment and waiting for the right opportunity to begin a profitable 2020. So that's my warning for you. All right, very different to what we've been speaking about. We've been very, very bullish on this market for quite some time, but now we need to obviously heed the reality of what the market has done and what will naturally follow next. Very quickly, I'll show you the ADX readings. They are still elevated, okay, suggesting that we're towards the end of this trend. And even as at the close on Friday, we've got a mixture of outside day candlesticks. We've also got tweezer top reversal candlesticks on some of these markets as well, which is suggesting, right, at some point soon, it may not be this week, it may not be the following week, it's really going to test your patience and your discipline as a trader. However, again, the real returns are going to be made upon the pullback of the market and then positioning yourself further into 2020. All right, so I wish you all a very nice weekend, no matter where you are located around the world. Again, I recommend, I've just updated the website, pivotpoint-trading.com. I would recommend that you sign up, have a look into that pro analysis class. And what I'll do is, as I do each and every year, is hold your hand through the ebbs and flows of the market. Especially, I believe it's a timely sort of, I guess, the nature of it all is really coming to a head in what I believe is going to be that of a macro top at some point in 2021, a macro transitional top that will sort of signify the end of this bull market that we've been in since 2009, if I can bring this up on my chart. and unfortunately usher in that of the natural sort of cyclical nature of the market, whereby we see a major bear market. That's going to come. It won't be this year, at least at the moment. That's what we're seeing. But again, a lot of valuable information in that Pivot Point Pro analysis class. All right. So as for the first note of 2020, all right, I'm happy to be back. I'm glad to be back. I'm refreshed to be back. I was a little bit jet lagged yesterday. But again, I'm really looking forward to a very prosperous and successful 2020. And I hope you are all coming along for the ride with us. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Farewell.